Felix here, and welcome to this pre-market live stream. In the next couple of minutes, I want to run you through the $90 billion buy warning. It could be a much bigger buy warning. In fact, I'll walk you through the Santa rally, how likely it's going to happen, and also some cautious words about what to avoid in the next week or two, and then a bunch of stuff that's just going to the moon and how we should therefore possibly be allocating our funds to make the most of the last few days of 2024, a glorious year for investing. So let's jump straight into it. Who wants to make some money today? Put a smiley or a one in the chat and let me know if that's what you're here for. If you want to lose money, also let me know in the chat. Okay, so we've got one more push here, and that is the flow of funds. So there is a seasonality to how money flows into the stock market every single year. And if we go back the data almost 100 years here, since 1928, we is here, right? That is us right now. And I'm seeing a lot of ones, a lot of smileys. It seems everybody wants to make some money here. Even the Germans who are writing, yeah. Abdullah wants to make a lot of money with about 10 ones. I like that, Terry. I like all your smileys. And what is the chart showing you? Well, we would expect us to go about, give or take, 2% higher. And that doesn't sound like a lot, but if you think about the market overall, that is quite a lot. And then we'll get into in a moment what will actually go up a lot more and what will not go up, because that's a really important distinction. But from a seasonality point of view, we should be having a very, very nice end to the year. All right, brilliant. So let me just, yeah. Let's then be a little careful. So there is one date that I want you to be aware of in the next coming weeks. And that is just before Christmas, just before Santa is going to land his sleigh on your roof. Around about the 24th, buybacks fizzle out. I'm going to say end here. It's a little bit of an exaggeration, but as we go into the earnings season majorly, we got some big earnings to talk about as well. Adobe and Broadcom, two very opposite stories there. One's up 12%, one's down 12%. But when the buybacks end, there is a slight risk just before Christmas that the party might slow down a little bit. So that's just a date I want you to have in your mind as one where I wouldn't be surprised if we get a little pre-Christmas dip here. So note that date, basically just before Christmas, 24th. Mark, give the showmaster some likes before he starts complaining. Yes. You know, I'm German. We complain a lot. That's the way it works. All right, but let's look at this here, because if you listen to this and put that into the framework of all the money flowing into the market, the AI spending frenzy looks like it still has some ways to go. This is from Bloomberg. You know the people, the miseries run by Bloomberg. Broadcom said it expects 65% growth in A product sales this quarter, and the potential market for AI components may reach 90 billion by 2027, which is extraordinary. So basically, you know, going to the moon here. So very, very positive. And to bring us to our title, which is what I put in this video title, which is, you know, the $90 billion. Where is it coming from? Well, right now, all the money, literally there are 13 trillion in US stocks right now. And the inflows we had in 2024 were 388 billion into stocks, right? This here is stocks. If I could spell stocks, you see, bankers can't even spell a 5-letter word. Is it a 6-letter word? Can't count either. And we're not that smart, honest. Money markets, which is basically what? It's basically cash. That's pretty much what that is. We had 992 billion flow in there. So almost $1 trillion went into money market funds. If just, and that's now $9 trillion. If just 1% of that money decides that earning 4% interest rate sucks when the market's just gone up 30% this year and we're expecting another wonderful year in 2025, if just 1% of that money makes its way into stocks, that would be $90 billion, which is a bucket load of money considering we did 388 billion for the whole of 2024, right? What if it's 2 or 3 or 4%, right? We could be doubling the amount of money that flows into the market next year compared to this year. And we went up 30% this year, right? So to me, this is the number to watch. Now, money market funds don't move that quickly. They're a little bit slow and stagnant, which is why I'm looking at very low numbers here, just 1%. So that's important to know. And you feel free to take a screenshot of this, and that way you can show somebody and actually explain this to them why this is super, super important. But here is what I want you to remember. The market isn't an equal thing. Not everything goes up the same way. And this year and the last year, only 31% of companies, so only 31% of stocks beat the market. And what does that mean? That almost 70% of companies underperformed this year. So what does that mean for you buy and hold index funds buyers, which is what everybody always tells us to do, right? Buy the index fund, says Warren Buffett. And then he doesn't. Actually, he has a little bit in an index fund, but basically he doesn't. Most investors don't buy index funds because they understand this. They understand that 70% of stocks are underperforming the market. So 70% are basically miseries. Well, what does it say to you? Think about that. What happens when you buy and hold losers? So if you buy the index is made up of this: 70% losers and 30% winners. So do you want to hold the losers? Is that what you want to do? Do you want to own the losers? Is that the intention? Doesn't really make a lot of sense, wouldn't it? Wouldn't it be nice if we could buy mostly winners? Maybe 50%, maybe 70%. What if you could swap this around? Wouldn't that be nice? Imagine how much better your returns would be. So how do you do that? Well, you have to learn how to spot winners. And you might think it's impossible, nobody can do it. Well, traders have been doing it for about 5 decades. And they've used similar sort of rules over the last 5 decades. They changed slightly as the market sort of changed and gotten a lot faster and so on. But as Scott says, the winners have to win a lot harder if you hold 70% losers, right? You're basically like a welfare state where the top 30% have to pay for the losers and then themselves. So to me, the whole index fund investing thing is better than not investing. I mean, no argument there, right? It's 1,000,000 times better than not investing. But what's 1,000,000 times better than the index fund? Well, it's being mostly in winners. Right? So how do you spot winners? Well, I think my friend Fox here already shared it with you. There's a link in the top of the description, in the top of the chat, and that leads you here. Because if you actually watch this masterclass, it takes 30 minutes long, and you actually write down the 4 rules that I give you, take some screenshots, you can rewatch it, you can move the timeline along and watch the key parts again and again, and then you actually implement that. What's going to happen? Well, according to the many people who messaged me, it's going to do something tremendous to your returns. And that's what it's doing to mine. I mean, we have these massive winners again and again and again. And that's how we make a lot more money. So we are no longer bag holders, and we no longer own 70% losing stocks, which is just a horrible thing to accept. Like, yeah, I'm going to buy, shit 70% of the time, right? That's worse than being wrong 50-50, right? I mean, most people would think it's a coin toss if you have zero knowledge. I think you can turn it upside down. I think you can buy winners easily 70% of the time. That's my humble opinion. So you might want to check that out. In fact, if you want to leave this stream right now and just go to felixprehn.org/get-free, I'd be super happy. Why? Because it's better to learn skills than to learn news. news is irrelevant unless you have the skills to apply them. So check it out, my friends. And here is a nice example. Who here wants to own healthcare? Here's a chart. This is the healthcare sector, you know, all the fat loss drugs and everything else. Who wants to own this? Anybody want to own this? If you say yes, I want to own it, put a 1 in the chat. If you don't want to own this, put a 2 in the chat. Let's see how we're all feeling about the healthcare sector right now. Who wants to own healthcare? Daniel says up 50% in the last 90 days. Mostly due to Felix and the Masterclass. Daniel, nothing makes me happier than you saying that. And you should take all the credit, my friend, because you are the one who did it, right? I can give you some tools and knowledge, but you are the one who's actually implementing it. That's what's making the difference here. Okay, we got mostly 2s here. Simon wants to own it, but pretty much everybody else wants to buy better things. Daniel, RFK, yeah, that's the underlying reason for it. RFK Jr. is destroying healthcare. Finally, right? So I actually had a trade on in healthcare. And where did we exit? I don't remember exactly, but I would imagine it would have been here. Yeah, either here or there, because that would have been our rule. So we would have drawn a trend line here, which is a little fat here. And then when we fall below that trend line, you know, you see these points here, those ones, we would have exited. We might have also exited below the 50-day moving average line. And I remember I lost a little bit of money on that, and I was a bit annoyed. And then I thought, RFK, I kind of forgot that connection. And was that a good call? Yeah, we got out at about 153. We're trading at 141 now. So, you know, 7-8% lower. And there's a good probability it's going to go back into the 130s. Maybe it's going to go even lower. So don't be that bag holder, because it sucks to be that bag holder. And really, if you look at that chart and, you know, it's going down pretty significantly. And then you look at this here, and this is data from Goldman Sachs, which says inflows have been huge. US equities logged $186 billion worth of inflows over the last 9 weeks, the largest inflow on record. We've never had more money pour into stocks than in the last 9 weeks. Yet there are still sectors, there are still stocks that are losing, and most people own them because they think you should buy and hold forever. And if your horizon to get rich is 30 years, great. It works. It works. You just keep putting money into it. You keep compounding. You keep buying the S&P. It'll work. Do you have no further interest? You have no further time? Go for it, right? It's much, much better than not investing. But you will buy 70% losers and 30% winners. And my question to you is, why make life so freaking difficult? Right? It's very, very rare that you decide to buy 70% losers and 30% winners. So has that been helpful? Has that been helpful to actually understand a little bit more why this is a stock picker's paradise and has been for the last 2 years? I mean, it always is, but the last 2 years, it's particularly strong because we've had this massive, massive gain in some stocks, and only about 30% of the stocks are actually outperforming. Hey, if that's helpful, put a thumbs up in the chat so I know it makes sense. If it makes some sense to you what I just said, just some sense, it doesn't have to say necessarily 100%, put a thumbs up in the chat, and I will understand that you've understood it, and we can move on and look at some of our favorite stocks here and so on. Darren, go take a nap. What's going on here? Bit of hostility in the chat. If you want to go watch that masterclass as well, there is a link in the description. There's also a link at the top of the live chat. Thanks to Fox here. Terry, okay, 5 thumbs up. That means you paid attention. I appreciate that. Samuel, Billy, Logan, Christopher, Skitties, Dave. Okay, you guys, it's making sense for you. Love that. Judith, yep, Sydney as well. Okay, I'm getting a lot of thumbs up here, which is brilliant. Okay, love to see that. And okay, then we got some questions on Palantir. We got some questions on Adobe. We got some questions on Broadcom, and we will look at all of those. This is the pre-market right here, right now. And Nvidia is up 1.5%. Tesla is up 0.6%. Palantir, which is on here now. I kind of can't get used to that. It's one of the big stocks now in the S&P. It's up a little bit, 0.1%, which is good. No major drawdowns. Basically moves less than a percentage point. We just don't really care about. Okay, I'm loving all the thumbs up that are coming in. Brilliant. Amazing, guys. I'm glad we are giving you some value here, which is always the intention. So let's have a look at some of our favorite stocks. Okay, so there are two things we need to start with. Might not be your favorite, but it's important to understand. Adobe basically wet the bed. Adobe is the inventor of the kind of subscription software model, and it fell pretty hard yesterday, as you can see. And guess what? Where it fell to? It fell to the support line rather, at 470, right? It hit it perfectly. Once again, the support lines in Trade Vision are useful. Very, very useful. So it's also here the low of 1st of November. So that's pretty bad. Is that exaggerated? I'm not sure. I haven't read the full earnings yet, but it looks pretty bad. So on the other side of the coin, and kind of saving the AI rally here for us, is Broadcom. John's saying, if you buy a stop loss and we get stopped out, how do you determine when you buy back in? Next breakout. Very simple. For me, that's the only rule there is. If it isn't a breakout, then I'm not in it. Because you have to ask yourself, do you care which stock you make money with? Do you care if you make $1 million with Palantir or with Broadcom? Right? Palantir is a bit sexier, Broadcom's a bit dull, but does it matter? I don't think so. At the end of the day, you're only happy because your portfolio is green, right? Don't really care what it is. I couldn't care less what I own, honestly, from a sort of trading kind of point of view. Long-term stocks, there's a little bit more of a, thought process there. But in the short term, we basically just want to buy whatever the heck's going up with the right setup and the right rules, not just going up. There's a bit more to it. Look at that. That is Broadcom pre-market. that's a rally and a half. It's trading at $214, taking the resistance out by $14. So what do I do with that information? Well, first of all, somebody knew. Somebody always knows. Look at the volume down here. Can you see that? Can you see the volume? Can you see that the market is leaky with insider information? 3 days in a row, volume goes up. What the heck's going on there, right? There's typically a telltale sign for every major breakout just before. So looks very bullish, yes. It looks very, very good. It's supporting the whole kind of rally. Look at some of our friends here like Palantir, which is making most people a lot of money. I don't think there's a soul in Palantir who's lost money. Is Broadcom going to eat NVIDIA's lunch? No, I don't think so. I think it's kind of complementary, to be honest with you. I don't think it really affects NVIDIA. We want them to do well, all of them. So here is Palantir. What happened yesterday? Well, guess what? We hit the resistance line at, well, $75 here. You see that? And then we came back down again. That's what the candle shows. We went all the way to the top there, came back down because market makers sold. That's the fourth time in a row here. We're trading slightly above yesterday's end of market at 73.65, which is pretty good. So we can live with that, right? It's a little bit flattening out, but it's still looking very, very bullish. What happens when the resistance has been broken? What's the next resistance? Well, what you want to watch out for is, does the resistance move up? In which case, the whole market's moving up. All the positions are getting shifted up, which is a very positive sign because everybody's now thinking at a higher level. If the resistance stays at the same level, then what happens is that you might come back down to it because the market's going as a rally, but I don't really believe it. So that's definitely a useful thing to look at. Some of our other favorite stocks that are flying so far, look at Tesla in a second as well. Laura, honestly, Laura, watch the masterclass, and then I don't need to spend 30 minutes explaining the same thing every couple of minutes. And that way you can replay it and watch it again and look at the charts and so on, and do that in your own time. And you can obviously do that right here, right now. The link is down below. The link is also at the top of the chat. Thanks to Fox Gaming, who pinned it there very kindly. SoFi is doing a little bit of a beautiful rally up, and now we are a little bit consolidating sideways. Nothing major because it's still a huge breakout, and we're trading right now ever so slightly above the resistance, as they say in the chosen country. the French think they are the chosen country. Ask them. They'll tell you. And 1603. So is that meaningful? Not really. It's 3 cents above the resistance. So we're just kind of flirting with the market makers, and they, beat us over the head at the end of the night, which isn't very nice. But, so positive, but not exactly like, oh my God, it's going to pull out so much. Optimus is going to look like Trump. That would be funny, wouldn't it? Let's have a look at Tesla on that note there. And how do you estimate support and resistance lines? We don't estimate them. It's a calculation, and we're actually working on some explanations for a lot of the stuff. And it's basically the sum of all the options positions out there. And then we know that the market makers on the other side of that trade hedge. So when you get to resistance, they have to sell. When you get to support, they have to buy. That sounds a little complicated, and it is, which is why we put it in as lines and make it really, really simple for you, so you have that information. Tesla at 421, woohoo, which is pretty sweet, not better than we were closing yesterday. We closed at, 418 yesterday or something. So I'm very, very happy there about our Tesla trades. They're looking absolutely bloody delicious. Let me have a look at them, actually. I imported them into TradeVision, which now shows me, that's the only thing I've imported in here so far. So I can now see we're up 177% on Tesla, which is not bad, right? $27,000. And how big was that trade? 15,000. So yeah, that's pretty extraordinary, isn't it? So yeah, stock picking, I'd say it works. SoFi is up 267%. PayPal is our laggard at 43%. And yeah, we're making some nice money with that. Score game there. You learned so much. I absolutely love you for that, my friend. Thanks very much for sharing. That's exactly why I do this. That's kind of the whole point of it. Look what he's saying is, you watched the masterclass. I watched an hour or so you probably watched it twice. And I've learned so much. And by the way, ever since I started following you, I'm up 10% the last 4 months, which is brilliant. Keep going, keep learning. And Cone FOA, okay, you're one of my... this is one of my stock trades, which we're still in, and it's up absolutely gloriously. This is a classic breakout, textbook breakout, and therefore was my biggest stock trade in the last couple of months because it was so perfect. And we got in here at, what did we get in at? 927 or 925 or something, right? Somewhere down here, that's what we got in, but that was a classic breakout, and we're now at $26. And see what these stocks do, right? They go up, they go down a little bit, they go up again, and then they go sideways, breakout again, and then down, and then up. And we didn't exit it. No, we didn't. You got to give them a little bit of room to wriggle. This is actually my stop loss at the moment. It's sitting there around the $17 mark, and now we're at 26. So we're probably going to go a little higher. We might go a little bit lower. We might do a bit more than this. Who knows? If we break then through our support, then we exit at a profit, which is really what it's all about. And Logan, thanks for encouraging score game there. Appreciate that. Thomas, thanks for the thumbs up. Haben Sie noch Verwandte? Hoover is asking whether I have relatives in Germany. Yes, I do. I do. Can't get rid of them. No, of course. That's where I hail from. What's your long-term investing strategy? Buy good stocks. That's very simple. And then short-term, long-term, it's very similar. It's very, very similar. But in the short term, we need to do a lot less work because we don't really need to understand the companies or that much. Matthew, you made 10K in 2 days from a breakout, and then your stop loss was hit. Isn't that brilliant? Isn't that a nice way to exit? And you don't never have to worry about a thing, right? You just set it up and forget it. It's just what it's all about. So well done, my friend. Do you ever sell half of your trade? Yeah, I do. And that just makes it a little bit more complicated, but I certainly do. Okay, there's a lot of requests here for AMD. Let's have a look at that. And if we get the likes up to 1,000, I'll take a few more of your questions as the market opens. So keep smashing that. And are you off to some hot destination for Christmas? No, I'm actually going to stay put here in Hong Kong, and then I'm going to travel probably 15th of January when everybody else is back to work. There is a lovely thing when everyone else is at work and the nicest hotels are empty and the service is better and the planes are empty. And I used to travel at Christmas when I had a job, and I no longer do. It's just busy. It's just a little stressful. I don't really need it. AMD, what is it? Is it a breakout rally, or is it a falling knife? It's a falling knife. I just don't buy. Look, one high, right? Two highs, third high, and that's the fourth high. That's the fifth high. Couldn't get any worse. And the only thing you're clinging to is the support line down here at 125. You break through that, you go back to 100 and something probably. So would I buy it? Not with $1 million someone gave me for free. Wouldn't touch the thing. So don't touch it. Would I short it? Absolutely not. And I tell you why. Because the semiconductor sector is the hottest sector there is, and they're in that. So I don't go against the industry. It also makes absolutely no sense. Okay, SoundHound. A lot of people are asking about that. Let's have a look. SoundHound. There we go. SOUN. And yeah, that was a beautiful breakout. First breakout was here at $6.20 here. And then this is arguably the second one here at sort of $9, $10. Go a little higher. And right now we are basically just getting a little exhausted, trading a little sideways. Volume is tailing off here, so it just means people are a bit exhausted. Not that many buyers left, and that's okay. Doesn't mean you gotta run. No, I would just set a stop loss somewhere here below that low somewhere, and therefore, if we do drop, then you lock in the gains and you move on and you find another stock. That's the way I would look at it. Is there a fund or a stock to hedge a portfolio? You could buy some cheap put options, for example. I've got a video out on that. If you go on my educational playlist, it's called something like "How to Never Lose Money Again." If you watch that, it teaches that to you for free. Some of you guys are asking about Okta. You've been watching my videos, have you? Thank you very much for that. 728 likes. That's pretty good. That's pretty good. I appreciate that. And Okta. Yeah, it's just going sideways, right? What do you see? Do you see anything exciting happening? Volume is flat, so the buyers are kind of bored, or they're planning their Christmas holidays. So we're going sideways. Would I buy it here? No, why not? Missed the breakout, which was arguably somewhere here. There might have been one a little bit before that. So yeah, not a lot going on there. Yeah, it might, and if it does, brilliant. If it doesn't, it also doesn't matter, right? How about a short 3 times ETF? Don't touch don't touch leveraged ETFs. Horrible things. Horrible things. I really wouldn't touch it. If you want leverage, learn options. Much safer, in my humble opinion. Some of you asking, putting the same stock in here again and again and again and again and again, with some hearts as well, which I appreciate. Well, so if I hit 20 in 2025, I don't have a crystal ball. I think it could. I think it could hit 30. I'm going to be in that trade until we break down, right? At the moment, we're up 267% on that trade, which is pretty good. So, if it drops a bit, we close out at, I don't know, 200% gain or something like that, and I'll be very happy. But right now, it's just consolidating. It's going absolutely nowhere, and that's okay. Doesn't really matter because we're up that much, but hopefully it'll break out again and get a bit of a catalyst there. Rate cut next week should help. Ding, ding, ding. We're up. Poet is one of those nutty stocks, yes, that you need a strong stomach lining for. Do you buy stocks or options? Both. Both. I sell options, I buy options, and I buy stocks. It depends on what it is. There also aren't options on every stock. So, for example, that FOA trade I was telling you about, where we're up, I don't know, 160, 170%, there are no options on that. So you got to buy the stock. And then if it's a really big ticker, like a Tesla or something, then I'll probably use options because there's so much liquidity here. So what's Poet telling you? Well, breakout here, right? Goes up, comes back down, second chance, basically. But the third chance takes you below the 50-day moving average line. So I would have exited here and I would be out of it. And then arguably this is another breakout because the volume was pretty good. And by that time, you've probably learned that good risk management is required here. So I think that would have been my exit. I'm not in this because it looks a bit bit nutty, and I don't really have appetite for nutty. But yeah, this was another breakout here, and then you could have set a stop loss here, and then you would have gone from somewhere here to somewhere up there. You would have made money. But these things are harder to trade. They take a little bit more discipline. They take a little bit more experience and practice. So don't pick the crazy stocks. It's just harder to make money with them. And it's a lot easier to lose money with them. Paul, you want to be able to pay with PayPal for Trade Vision. You don't have a credit card? Really? You don't have a credit card? That's a bit weird, isn't it? Isn't that a bit weird? Surely everybody has a credit card nowadays. Right, anything else? Yeah, I think if there's something I would buy at the moment, I think Google, Amazon look very good. I think Microsoft looks very good. He gave a presentation or an interview yesterday. Their CEO saying that their compute restraints. So they had too few chips basically, right, in 2024, which slowed them down. That problem's gone. So they're going to have a very good next 6 months. So I think that could be something to look at if you want something a bit more conservative. And if you want something a bit more exciting, then just spot the breakouts. It's really as simple as that. How do you spot the breakouts? Well, all you got to do is watch what? The masterclass that we linked to in the top of the chat, and then in the first line in the description as well, which will take you about half an hour to watch. And if you take some notes and you actually write down what you learned, you actually apply it, then you'll be not just in the sort of top of the world because you actually do what you intend to do, but you will, in my humble opinion, never look at your portfolio and your stock charts quite the same way again, because you'll learn something that very, very, very few people actually understand. And to me, that's what this is all about. It's about actually teaching you what I do and what I learned. And I learned it in banking. I was lucky. So no credit card man likes Ramsey. Ramsey, I mean, I think he has good intentions. There's a lot of good stuff in there, but it's just, I don't think you can coupon yourself to wealth. I think you just need to make a lot more money. And he also says, oh, don't invest in anything else. Only index funds are the way to go. Well, if you look at what I just looked at, 70% of stocks underperform the index. So you buy the S&P, you buy 70% rubbish and 30% good stuff. The other way around, right? 70% rubbish and 30% good stuff. I would rather earn the 30% good stuff only and not the 70% rubbish, because that way I outperform the market. It's actually quite easy to outperform the market in my humble opinion, but obviously, mainstream opinion disagrees with that, which is a fair opinion. How do you set stop losses in Robinhood, my friend? I don't know. I don't use Robinhood, but I'm sure that if you type that into YouTube, it'll tell you, and it'll give you a video on it, because I'm sure somebody has done that. But I can't have. I don't know, my friend. We have a question about 3CAI. You mean AI, the stock? Where is it? Where's the ticker? What's the ticker? Isn't it just AI? C3AI, that's the other way around, right? Yeah, you're trying to confuse me. Here it is. C3.ai, which is sort of a Palantir for dummies. That's something like that. And what do you see? Well, what do you see here? Those of you who watch the masterclass, what do you see? You see telltale breakout here, right? Actually there, I would say. That was the breakout at about $28 or something like that. We're trading at $38 right now. And where are we right now? We're in one of these consolidation phases where Winston's a little bit tired. We keep hitting the resistance line here at the top, just like Palantir is, and that's what's keeping us down. And then we get support when we hit the support line at the bottom, which is why Trade Vision is tremendously useful. So go check it out. Fox Gaming, that's quite all right. They give me a challenge every once in a while. I need it. It's good for the brain cells. So our three little trades here are doing rather nicely. We're up quite nicely this year. ChatGPT will give you step-by-step instructions. Yes, LLMs will ask you answer anything nowadays. I'm actually using Grok a lot, which I absolutely love on Twitter. You can literally ask it anything, and it just tells you. Like, so if you type that into, say, you know, how do I set a stop loss on Robinhood, it'll probably tell you. It's pretty good. A little slow, apparently. Usually it's a little bit quicker. Interesting. So there we go. An amazing advert for Elon Musk's X. Nothing happens. But usually it's pretty good. I use it all the time to get answers that I would normally spend hours Googling. So where are we right now? Let's look at the day as it is unfolding here. ABGO is up almost 20% on tremendous numbers, 65% growth for the quarter. Tesla's flat. Big tech stocks pretty flattish, which is okay. Some of the AI stocks like ANET and so on are rallying in sympathy. Whereas our friend Palantir here? Is that Palantir? No, that's Parker Hannifin. It's in there somewhere, isn't it? Where did it go? Okay, can't see it. But yeah, looking pretty good. That's really all we want. We just want stability here, so it looks good. Stop losses are a lifesaver. They absolutely are. Stop losses are just amazing. Wrath, watch the masterclass, my friend. You'll get all the answers in there to all that question included. So, my friends, I love you watching. I love you for tuning in. I'm going to go and cuddle some kittens because that's important. I've got 2 new ones right now. So we got to do that. Did Grok answer the question? Yeah, look, told you exactly where to click on. Isn't that amazing? So AI is amazing. And what did it check? It checked Robinhood's actual website. So LLMs are extraordinary. If you want to do just one thing today, it's do seriously watch the masterclass down below, because you will actually learn skills. And if you want to make 2025 even better than 2024 was, the only way to do that is by improving you. Nobody else. No one else is to blame. It's not the government. It's not the taxes. It's not the regulations. It's not the politicians. It's not the market. It's none of that. It's just you. You can control you and your output. And if you improve that by 50%, which I think you can, then what's going to happen to your portfolio and your life and everything else? Well, it's going to do the same thing. So check it out. Links down below. Thank you for watching. Fox, my friend, thanks very much for the moderation. Appreciate you. And I hope to see you live on the next